In this video, we'll go over the setup we had this week. This is one of the setups we had on the Euro US dollar. So on those charts, you'll be able to learn how we approach the markets on a daily basis. This is the daily time frame, and before you start looking for potential trading opportunities, you always have to start from the hard time frames in order to understand the overall structure. What do we see here? We see that daily, at that point of time, the daily time frame, as I wrote here, is overall bullish, and previous day took this buy side liquidity, the previous highs, which makes long trades on this day a bit aggressive on the next day. This is everything we had to know from the daily time frame. 4-hour time frame, this is what we saw on the 4-hour time frame. As I said before, daily overall bullish, and previous day price took buy side liquidity, the previous highs, which makes longs, as you can see on this day, a little bit of aggressive. Now on the 4-hourly, this is what we saw. This was the previous swing low, this was the previous swing high. On the way to the upside, we had this bullish fair value gap zone, which price broke later on and turned into this bearish fair value gap zone. However, on this retracement, at that point of time, we saw that price was in the discount area. So in this case, move from this low to this high, market retraced back towards 50% area. So at that point of time, we were in the discount area, and this is good spot to look for potential long trades to the upside. Now on the 4-hourly, what we also saw here, as you can see from those 4-hourly spikes, this is your sell side liquidity. So as I said before, 4-hourly was in the discount area, and price also formed all those 4-hourly lows spikes, which served as a sell side liquidity. And in this bullish structure, whenever you see sell side liquidity to be taken and price shows you the structure shift on the lower time frames, that's a good area to start looking for potential long opportunities. Now to the upside, what we saw as a potential target was this 4-hourly high, buy side liquidity level as a potential target, and also the high from previous day and also the major high up here. So with potential long trades, you could be able to target that level, and also later on those highs up here. Now, once we saw price taking out these 4-hourly lows here and almost taking out also levels of sell side liquidity down there, we started looking for potential opportunities on the lower time frames. Now going to the 1-hourly time frame, this is what we saw again. So this is just a picture of 4-hourly before, but here it's a 1-hourly price action. And at that point of time, as you can see, 4-hourly was in the discount area, price formed this low sell side liquidity level, and this blue box is also Asian session range high and low. Now before London opened, we saw nice move to the upside, and then price turned around. It took the Asian session lows, it took 4-hourly spike, the sell side liquidity. As I wrote here, the 4-hourly sell side liquidity was taken. It was taken, and as well the Asian session range lows down there. So at that point of time, we had daily bullish, 4-hourly took sell side liquidity and Asian range lows, and after this sweep of the hard time frames, 4-hourly sell side liquidity and Asian lows, we can start looking for longs on lower time frames. So if you see like price having these hard time frames PD area, like fair value gap zone and previous lows or highs, and you see market moving towards that zone, and you see like structure shift on the lower time frames, then of course you can start looking for potential move to the upside in order to target the highs of the day or those 4-hourly levels up here as I mentioned before. So this is what we saw on that day. Now once this liquidity was taken out, we can go to the lower time frame. Lower time frames such as 15 minute or 5 minute. And what did we see here? After this liquidity was taken, after the Asian session lows were taken, after 4-hourly sell side liquidity was taken, and as well the Asian range lows, as I said before, we can start looking for possible market structure shift on 15 minute time frame. We need like a break of the structure, and you can combine it also with a 5 minute. So what do we see here? After this liquidity was taken, market pushed to the upside, it broke this short-term high, price closed above, retraced again, and we had another push up higher with this fair value gap zone. Then market retraced back towards fair value gap zone, and this is your good spot, as per rules, spot to look for long trades. You could also combine that with the 5 minute time frame, and in this case our entry for this market structure shift on the 15 minute time frame was as the market on this point, as the market approached this fair value gap zone. In this case, stop loss went below the structure, below the lows, and you can target the highs of the day or the previous day's highs up here. You're looking for 1-to-1, a little bit more in terms of risk and reward ratio, or you could aim for more, such as this liquidity and the previous highs up here. So totally depends on your trading strategy rules and trading plan rules, and that's how you can trade, that's how you can approach the markets on a daily basis. You need to understand the overall structure, you need to understand where are the liquidity levels, and when the market reaches those liquidity levels, and when it makes sense, of course, based on the overall structure and price action and timing, then you start looking for possible opportunities on the lower time frames in order to participate into those moves like that. So hopefully this trade breakdown we had with our students in last days is good for you and helpful. So make sure you revisit again in order to understand how we approach the markets on a daily basis. So thanks for watching, and we catch up soon. Take care.